Hello and welcome to this new edition of On the Record with me, Shireen Bhan. KV Kamath has been at the head of several important, significant reforms as far as India's economy is concerned, from the banking landscape to now what is likely to happen on the infrastructure pipeline as well as the digital landscape. This is also a time when inflation continues to be front and center, with the Reserve Bank raising interest rates to the highest level in 4 years and policymakers continuing to flag caution over rising prices. The world is moving towards more tightening, but the question is that warranted for India? Joining me now to discuss a whole host of issues with respect to the state of the economy is KV Kamath, Chairperson of the National Bank for Financing Infrastructure and Development. Mr. Kamath, always a pleasure. Many thanks for joining us here on CNBC-TV18. Appreciate your time. Let me get started by talking to you about the state of the economy with regards to inflation and what you make of the commentary that's coming from the MPC, specifically the minutes of the MPC's meeting, which clearly tell you that there is a division even within the MPC on the road ahead. What do you make of that?
I am slowly coming around to the view that there's a disconnect external between global thought leaders and central bankers, thought leaders in the sense theoretical thought leaders, as to how to deal with inflation and interest rates. If you see what has happened in the West, it's a complete break from theory. And I think it is right time for us to also rethink whether we need to see whether and what is the connection between interest rate and inflation by breaking down the components of inflation and then seeing what medicine is required. This context, before I talk about the commentary, let me talk about how, for just a minute, how well the central bank and the government have managed these two over the last 2 years, 3 years, and provided enough liquidity along the way. And that's why I think we are where we are. We did not increase interest rates as one could have expected. A knee-jerk reaction, no, it was not done. Liquidity was not tightened, it was kept easy. And you have the results to see. Look at it today. I would think that the central bank continue to do what it had done. Watch carefully, and that's what it is doing, and not necessarily try to do what the West may or may not be doing to find our own solution. As far as we are concerned, I just want to make another point. I think I'm getting increasingly disturbed by the fact that we have probably no reliable data good to go on. This is the policy makers, the regulator, the monetary policy. And it's coming out now, particularly, let us say, in terms of CPI now. And I'm sure the same will be in terms of other indicators. Question that comes to my mind is, are we measuring right? And I think we now need to measure right, because we are no longer a small economy. And I'm looking at our country going from 3.5 trillion to 7 trillion. And this is something that we need to fix now in terms of measurement, so that policy then can work with numbers which they are comfortable with. I think this is the reason I would think we see some debate in the MPC.
Important point, and I think this is a reiteration of what you've said previously as well. You believe that there is a disconnect, and that disconnect fundamentally in your assessment is on account of the fact that there is no reliable data, in your words, when we talk about inflation. But given where we find ourselves today and where that's led the MPC's deliberations, do you believe that we're likely to hit a pause, or given what at least the RBI members are saying, that we are perhaps likely to see further tightening?
I really don't want to make a call on it. I think that's something that the policymakers need to do. But I would think that one would need to look at CPI or other indicators a little more, with more focus, as it were, to understand whether this is something that we can take a decision on. Look at the system, as it were. There is a growth momentum. What is happening in that context? Take other, I would say, indicators that come our way in terms of dipsticks or any other measure that you could take to determine what is happening, and then take a decision. Because we do not want to end up in a situation where we raise interest rates and put an engine, the economic engine, which is now fine-tuned, put it out of gear. Getting it back in tune is going to take time.
Do you believe that we're at the risk of seeing that happen? You talked about the economy being a fine-tuned engine currently, but do you believe that further tightening could risk and destabilize the recovery that we have been in the midst of?
Let me say it very clearly that I have complete confidence in the steps taken by the central bank as the monetary policy authority and the central government. So I do not think that they will allow this machine to get out of tune. I said there is a risk of that if some people get on this path that interest rates increases. We need to go in sync with the West. That's all I'm saying. But I'm sure that the monetary policy authorities will do the right thing, and they've done it over 3 years. So I have absolutely total confidence in what they will do.
Let me ask you about an issue that, of course, we haven't really got an update on, and I would appreciate if you could share some light with us, Mr. Kamath, on where things currently stand as far as the NaBFID is concerned and the infrastructure pipeline build-out. Could you give us an indication of how much progress has been made, where you feel confident of, and where you see challenges today?
Yeah, as far as NaBFID is concerned, let me put it in context. We started with just my appointment a little over a year back. We have now a full leadership set in place. So it's not just the board and a few people. There's a management team in place for the last 3 or 4 months. And they are now in the process of actually starting the approvals for the first few loans. The pipeline to me is strong. The national investment pipeline is strong. The monetization pipeline is strong. I think they are working through this pipeline to look at what. My view is that whatever was the mind of the government in terms of what the institution could do, that institution will do, but over the next few years. And that was the timeline that was thought of. But now, since there is an executive team in place, I think the executive team led by the managing director are the right people to talk about where the bank is. But moving on to the other part of the question that you said, infrastructure, I see no slowdown. In fact, I see a speeding up on 2 fronts. Again, sometimes there's a question that the private sector is not involved. That's not strictly right. The private sector is not involved in those areas where over the last 10 years, I think it was probably very clear that these areas have a significant implementation risk due to a variety of factors, which are outside, in a way, the control of the private sector. For example, issues relating to land rights, issues relating to mineral rights, spectrum, et al. I won't go into the whole thing, which then ended up in a project being stranded. So it is right that these are done by the government. I think that's a correct step that was taken to keep the momentum going and look at the progress. We have to laud the government on that progress. So that progress continues. The private sector, on the other hand, are in certain other areas where they have found that the playing field is easier to navigate. So, for example, I would think the headline story there is telecommunications. See the way that business has grown, and with the private sector companies coming in, you're probably one of the most robust systems anywhere in the world at the lowest cost. So I think the public and private sector will coexist, and I would think that the public sector projects that are coming up, and that's where the monetization process that has been set in motion comes in play. As these assets get going, you then get them off your book, as it were, and use that money to finance something else. And again, I would point out the progress of this in the road sector and what NHI is doing, with the InvITs coming in almost every quarter or earlier, getting fully subscribed on day one, and that too is retail investment. So I think we are seeing new things happening, and I'm sure this is all to the good. The common goal is that we have to hit the 25-year Amrit Kal goal that we have set, which I think is somewhere between $30 and $40 trillion.
Yes, that is the aspiration and that is the target. But, Mr. Kamath, you said that you believe that the private sector's involvement across the economy, especially in the infrastructure sector, etc., is not going to slow down. In fact, you believe that it is speeding up. In that context, let me ask you about what we are seeing play out at this point in time with one of India's largest groups, and that is the Adani Group. Of course, what is happening as far as the stock markets is concerned is a separate story. What is the other side of the story is the group's ability now to go out there and do the kind of capex that was expected of them. There has been a retracing, there has been a sort of scaling back, a scaling down, if you will, across group companies at this point in time. To start with, I want to understand from you, what does the current crisis with the Adani Group stocks and the Adani Group mean from an economic point of view?
Yeah, I think, firstly, I don't want to talk about any specific group, Shireen. The market is functioning, the banks are functioning. The rest of it is, I do not really want to comment on it. I will only say this in a larger context that, my 50 years plus of being in the banking business, 52 years to be precise, I don't think that any single group makes, or carves off the history of this nation. So I have, really speaking, no concern that overall India will continue on its path of progress at the pace we have outlined. That's all I want to say. And I don't see any loss of confidence in India consequent to these things, because I think the external world now recognizes that we have our own regulatory checks and balances, which will keep things in check. So beyond that, I don't want to speak on any particular group.